ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast.
Welcome to the Synergy FX Week Ahead in Forex video. My name is Jeffrey Baskin. I'm the Chief Currency Analyst and Head Educator for Synergy FX. Before we begin, we have a small disclaimer. This video is for educational purposes only and should not be construed as trading advice or counsel. Please only invest capital that you can afford to lose. And please consult a qualified financial professional should you have any questions about the risks and dangers associated with trading in foreign exchange. Okay, we're going to get started with the euro dollar. We saw last week a lot of action on the euro. We saw Greece finally come to the table and they reached an agreement on the bailout. Everybody, expected that this would boost the euro, which it did on a short-term basis. We saw a double top at about 34.85 going into the end of actually the beginning of the week, and then everything pretty much faded. The glory of the deal and the benefits of the deal, it's not going to be seen immediately. It's going to take at least 6 months to a year to start panning out, and the shine seemed to have worn off. As I said, we had a double top at 34.85, and now we're trading at around 31.3200. If we zoom in here, we're on the daily chart. And we're just going to get rid of some of this. And our mark pretty much is going to be 31.60 to the downside. Whether or not we're going to get another leg, or whether down, or whether or not we're going to see a bounce. Right now we're trading at 32.04. We're sitting on the 100 period moving average, as well as the 38.2% retracement from the move that we've seen pretty much from the beginning of the year. So what we want to see is whether or not this Europhoria that we've had over the last 2 months is going to hold and continue, and this was just kind of a stumbling block, or whether or not we're going to see more downside. Personally, I think if we get a break below 31.62, our next target is going to be this area right here at 30.60, which is the next area of support. And then after that, there's really not a whole heck of a lot that's going to get in our way until we see the lows on the year, as well as the recent lows at 26.50. I personally think that we are going to continue to see a downward trend in the euro. We're starting to see a little bit more dollar strength as well, and tightening up of the U.S. market. So all of that points to a bearish euro outlook. I do think that we are going to push towards the downside heading into the summer, and I think that before we hit the summertime, I definitely think that we could be looking at 1.2650 like we saw back here in the middle of January. With that being said, for whatever reason that it springboards off of this level at 31.60, and we start to push back towards the upside, 34.85 is most recent resistance. In addition, we have the 200 period moving average, as well as some other previous areas of resistance in here at 35.74. So I would look at upward moves. If it starts to hit this level, once it breaks 36, that should indicate that the euro is strong and that we are going to see an upward trend. Right now we could see some chop and some sideways movement. as things kind of continue to shake out and people really get a gauge on how good or bad this deal is going to be for Greece as well as the euro as a whole. And that could mean that you're going to bounce between these two moving averages and bounce off, recent support. So keep your eyes open at 31.60, and definitely take a look at the news that we have coming out this week. That could definitely push us one way or the other. Here's a quick look at the news for today. It is a heavy news day. We have retail sales coming out of Switzerland at 3:15 a.m. Eastern. We have non-manufacturing PMI numbers coming out of the U.S. at 10 a.m., factory orders at 10 a.m., and then also overnight services PMI out of Britain and retail sales out of Europe. So it's going to be a busy morning coming out of Europe and heading into the U.S. session. So we should see a lot of activity, and it's going to dictate how we're going to play out the rest of the week. You will see that we are looking at a relatively busy week here. And we have a lot going on, including non-farm payroll at the end of the week. We'll move to the Australian dollar. We're going to take a look at the overall daily chart first. Now what we see here is we kind of topped out at this level here, which is 108.50 approximately. We're back down to about 107.14. We've hit a little bit of support at the 107 area. I personally am also bearish on the Australian dollar. Gold's been, really, it had been surging, but it really got beat up at the end of last week on dollar strength. I do still think that we are going to see some dollar strength, and I personally think that this previous level of resistance is acting as new support at 107.15, and if we get a break below 107, that could be your indication of a downward move. We're going to zoom in here and take a quick look at a 1-hour chart. You see that we've already broken below your moving averages, both 100 and 200 period moving averages. You see they kind of backed up a little bit, ran to this, and then pulled back. I do think that this will act as your resistance at 107.30, and if it continues and we do dip below 107, that's going to be your trigger to see a bearish move on the Aussie, and I think that it's just more of an indication of some dollar strength that we've been waiting for. We'll look at corresponding gold. This is pretty much what you see happen. We got close to 1800, and then the bottom pretty much fell out. We went from about 1785 all the way down to about 1690. Support is at around the 1695 area. And so we'll see. Here's about 1700. And then we had a wick, that ran to 1686, but it didn't hold. So 1700 seems to be your recent support level. So if we do see breaks below 1700, that should indicate gold is not the current haven, and it will also probably drag the Australian dollar down with it. So right now we're sitting at 1710 and change. 1711 seems 1700 seems to be our support target, and if we get below that, we could see even more weakness on gold and the Australian dollar alike. Let's move to the dollar yen, which up until recently, pretty much for the last couple weeks, has been stuck in this range, and then recently we've seen the dollar surge against the yen. We got all the way as high as 81 and change at 81.85 before it pulled back a little bit. Now, I think that with the recent dollar strength and yen weakness, we're going to see this pair continue. You probably see a little bit of profit taking, which you're seeing right now as the week opened. But I do think that as long as we stay above 80, we are going to see continued dollar strength and yen weakness. If you take a look, we have support, previous levels of support around this 79.90 to 80 mark, and that is pretty much when we had intervention where it would run to. So we want to see if it does pull back when we get to this level, whether or not we're going to re-enter this range that we were in for 5-6 months, or whether or not we're going to stay up and the yen is going to continue to weaken and the dollar is going to continue to strengthen. I personally think that's what's going to happen, but we shall see. This is the hourly chart, and once again you're going to we're pulling back to our 100, 200 period moving average lines before we're getting bounces, so we'll see if that continues, and in either case we'll stay above the 80 mark. If we do get a break below the Ichimoku cloud and the 100, 200 period moving average, that could be an indication that this is going to start heading in the other direction. But for all intents and purposes, I do think that we will see this pop 82 and continue upward. We'll stick to the yen and talk about the euro yen. Euro yen is going to be interesting because we're expecting some euro weakness and some yen weakness. So this could kind of move sideways a little bit. So we had this move from March of last year to January of this year. On the daily chart, we pulled back to the 50% retracement level here at about 110, and now we're back down to about 107.16. There's been a lot of movement on the euro yen. Between the yen weakness and the euphoria strength, this thing surged big time from the middle of January at 96.50 all the way up to 110 in the course of about 5 to 6 weeks. Now I think it's going to kind of slow down and back off a little bit. And I think we will kind of trade around and head sideways until things shake out in Europe and we get a direction on that. If there is a lot of euro weakness, obviously that will lead the way on this, and we will see this give back more of the gain. Right now we're sitting right at the 38.2% Fibonacci level, and if we do break below that, then our next target is going to be this moving average at 105.22, which is the 200 period moving average. Okay, we're going to switch over to the dollar Swiss. And with the dollar Swiss, we've seen dollar strength as we've seen pretty much across the board. We double bottomed at 89.25 roughly. 89.35. We had a midpoint at 90.13, which is roughly 80 pips, and we saw that materialize. It went to 91 and then some. We got all the way up to 91.50. That's pretty much level of resistance, as you can see here, and we are going to see what happens. The traditional havens with gold and the Swiss franc have given way to a recently strengthening dollar, and we are going to see if that continues. We do have a lot of resistance, as you can see through here, and if we get a pop above 91.50, that's going to give you an indication of that, and we're going to see a run probably towards this high here on screen at 92, 99 or 93 roughly, and that's going to be our next marker. Okay, so if we do break 91.50, our next target is going to be this 38.2% retracement at 91.80, and then a solid break above that. We'll be targeting 92.60 to 93 area, with previous resistance and 50% retracement. I do think that we will see dollar strength this week, but once again, we have non-farm payroll, we have unemployment, and we also have crude oil inventories and manufacturing numbers that are all out this week from the United States, and plus we have RBA rate statement out of Australia, Australian GDP, Bank of New Zealand rate statement, employment and unemployment changes out of Australia, bank rates out of Great Britain, overnight rate out of Canada, and a trade balance out of Australia. Trade balance out of Canada. I mean, it's going to be a busy week all the way around, and a trade balance out of China. So it's going to be a busy week all the way around, and I really think this is what's going to set us up, for the month. As far as where we are now, we are at some very pivotal areas for some of these currency pairs with everything that's been going on in Europe. Now that is going to kind of die down somewhat and not be the headline every single minute of every single day, it's going to give way to some of the other things, and I think some of those other things are going to be the recent strengthening of the U.S. market, U.S. dollar, and I think we're going to see a little bit of a tide turn on that and get some dollar strength, especially in some of these currency pairs like the Australian dollar, which has been, if you look at the daily, pretty much since December, we've been seeing nothing but uptrend. We'll take one quick look at the Euro Swiss, which we have been tracking in a lot of the videos and webinars that we do, just simply because of the continued interest in potential intervention. We're at 20.55 right now. 1.20 is the mark on the downside, and 121.25 is resistance on the upside. We're still in the middle, so right now, for now, it's not going anywhere, but we'll see what happens, especially with Iran and the oil story, and whether or not that continues to be anything, as well as whether or not their euro runs into any more problems with Greece. So once again, we're looking at any breaks below 120 to the downside, and then 120, 125 to the upside. We'll look at one more currency pair, being the Great British Pound versus the US dollar. Alright, now with the Great British Pound versus the dollar, it's been a little bit choppier. We've seen a fair amount of chop through the market here. We're sitting similar position as we were on the euro, right at a moving average line and a Fibonacci retracement line, which is 58.20. So roughly any breaks below 5,800, and then we could be looking at a target of the next Fibo line at 57.12, and then the next target at 56.50, which is the next moving average. Once again, the theme for this whole video has been dollar strength. I still think we're going to see it, so keep your eyes open. If this thing breaks below 5,800, it should reinforce that, and you should be able to find some opportunities based on the way that the chart is setting up. So that is all I have for you guys today. Thank you very much for tuning in to the Synergy FX webinar week ahead in the Forex market. If you'd like to follow us on Twitter, it's twitter.com/synergyfx, or you can find out some more information about Synergy at www.synergyfx.com.au. Thanks again, and good luck with your trading.